Welcome back, listeners. My name is Larry Kolbig, founder and CEO of the Haven Financial Group. And if you're just tuning in, you are listening to the Haven Financial Group radio show, where weekly we discuss, crucial retirement and financial topics that can really make the difference between surviving retirement and thriving through it. This week, it's really how insurance and retirement go together. Yes, insurance. Some like to talk about, others would rather not talk about it. And if we need it, we better have it. That's why we got Glenn here today.
Well, Glenn's a guy who likes to talk about it, so that's good. We are really glad that he is with us today. Glenn Ramey with us, an insurance expert with Haven Financial Group. We started the show talking a little bit about Medicare. There's a lot to discuss about Medicare, and we've pointed out already that, if we've left you confused, we apologize, but, it really is one of those things that you want to sit down and have a conversation about. You also want to talk about long-term care insurance, and we thought we'd pick up the conversation here. Glenn, talk through exactly what long-term care insurance is and why people might need it.
Yeah, absolutely. So long-term care insurance is a type of insurance that's meant to pick up certain health care costs we're going to have that are not compensated by our health insurance, right? We're talking about home health care above and beyond rehab after a medical situation, but the maintaining of us. Assisted living facilities and nursing homes are typically the three categories we think of that long-term care insurance is helping us with and helping with the cost of this. As we said, Medicare doesn't cover this stuff. Example, Medicare will cover up to 100 days of inpatient skilled nursing care preceded by a 3-day hospital stay, but the statistical average actually paid by Medicare is only 27 days. Most of us don't even get the full 100 out of that before we're not recovering anymore, and we have permanent needs that now we need help with that our health insurance isn't helping out with. So we turn to these other types of insurance vehicles to help protect against this potential cost of, again, just median cost in our state right now of nursing homes is $10,000 a month. We're talking over $120,000 a year for healthcare cost in a nursing home. And the average stay being 3 years, that's $360,000 of today's dollars to try to cover the averages people are facing in long-term care.
Glenn, when I think about the long-term care insurance, immediately what comes to mind is a high cost. And you start saying to yourself, well, maybe I could stay with the kids if I had an issue, or I would find other means because the cost is so exorbitant. Yeah,
I say, like anything, it costs what it costs because of what it pays for. Mm-hmm. So the fact that there's a 70% likelihood we're going to need assistance is making that insurance expensive. But it doesn't have to be as expensive as people think it is. There's reasons why we do it. Sometimes strategic in preserving assets. We want to make sure that the end of our life doesn't see all of our money going to a nursing home and none of it going to our family. Right? Well, if we do nothing about long-term care, that could very well be the likelihood of the circumstances you're going to face. But if we plan for long-term care, we can include asset preservation in these long-term care policies to make sure that even in the most extreme scenarios, there's something left of what we worked hard for that gets passed on to our family and not get paid for in healthcare costs.
Long-term care insurance needs to be taken out a full 5 years before you can use it. Is that true? Or is there some kind of rules and regulations associated with that?
Yeah, so the 5 year isn't specifically that. I'll tell you where that 5 year comes into play. Technically, you need to do it when you're healthy enough to qualify for it.
Okay.
Right? That's the real issue. The challenges for me is when I'm facing a consumer that has already had a healthcare experience that has either put them very close to or already in long-term care. Okay. After that, it's too late. What you're referring to, the 5 year rule, is about gifting, our ability to give money to others or to give like a wedding gift. I'll use this example because it was horrible, but it was real. Client approaches us saying, hey, my husband's going into a nursing home. We're talking to medical assistants in Minnesota, Medicaid federally, to help pay for these costs because we don't have the money. And oh, by the way, I want to share with you that we had just had a wedding 2 years ago. And at that wedding, we gave a $20,000 wedding gift to the couple and hoping to help them start this new life together. And we're finding out that that's a gift counted against us in this spend down for long-term care. And now we got to go and ask for that money back from that couple and instead pay for the services of the wedding that didn't come close to the $20,000 gift we wanted to give because the state wants to use that money to pay for care instead.
Wow. Now, these are all things, again, folks, that, I didn't know, and chances are very good you don't know if you're not an expert about insurance. Again, we keep saying it over and over, but it is so true. This is why you need a partner to sit down and to talk through these issues related to insurance and really everything related to retirement. We say this each and every week. Working with a partner, I think, gives you confidence, and it certainly answers a lot of the questions that you might have. 612-504-8400. That is the Haven Financial Group. That is their number. If anything we're talking about today strikes a chord with you, be sure you pick up the phone and give them a call. Let's switch just a little bit here. Glenn, we want to talk about life insurance and how that supports retirement. There are some life insurance policies now that you can take out, though, that can be used for things like long-term care, correct?
Absolutely. Yeah, that definitely exists. So let's put life insurance into three different categories. We have term life insurance, right? These are when we're buying a duration of insurance, usually to protect against a liability, right? This is when I'm working and I'm worried about passing away prematurely and replacing my income for my family because I'm not there to incur it anymore. We're taking on debts like mortgages. We're trying to take life insurance to cover those liabilities. So term is a great temporary insurance policy to cover those liabilities that we might have during our working years, and often will go away during our non-working years in retirement. Then we have the two more permanent types of life insurance: whole life insurance policies, which is a fixed set design of insurance that's great for estate planning, legacy planning, and guaranteed cash value growth inside policies. And then you have universal life policies. And these are kind of a mixture between term and whole life policies that are permanent. They have a cash value component similar to a whole life policy, but it's not at a guaranteed rate of return. It mirrors the markets to take on more of the upside of the markets. They have more flexible premium functions. They can often be cheaper than whole life insurance policies to do, with tax-deferred growth on the cash value inside those policies. And nowadays, you can have riders for long-term care on either of those permanent policies, whether it be whole life insurance or universal life insurance, where we can have the death benefit not just be for someone else upon our passing, but if we need it today for healthcare costs, we can draw down that death benefit towards paying towards those long-term care costs that we might incur.
And what is the cost difference for a life insurance policy that has that rider versus just taking out long-term care insurance policies?
Not that much. You might be talking maybe like a 10 to 20% increase in the premiums to add liquidity and provisions that allow, again, that death benefit to not be for someone else only, but to be here for us just in case that's how it's best used.
Oh, what are the tax ramifications associated with something like that?
Wonderful. So life insurance is tax-free in its benefits. So not only does the people who receive it as our beneficiaries receive that money 100% themselves, Uncle Sam does not get a piece of that pie. And as well, if we're drawing it down for long-term care needs, we are receiving it as a tax-free distribution where no income tax is applied to it at all.
Larry, talk to us about your feeling about all these different kinds of life insurances.
Well, as Glenn is talking, insurance, there's a variety pack of what's available out there. And choosing the right life insurance policy or long-term care policy can be a key part of securing your retirement and protecting your legacy for those that want to protect the legacy. Understanding these options is so very important to make informed decisions. I think the takeaway from this segment could be, if you're listening and you have long-term care, get it reviewed. We see lots of people paying way too much and not much value. They got sold something they really didn't maybe understand. Maybe you don't have long-term care insurance like a whole bunch of Americans because they got scared from the Cadillac plan. There's other options that are available that are much more entertainable and pocketbook positive, if you will. I don't know about that. That's the right terminology, but you know what I mean. And then if you have life insurance, maybe you're listening and you have life insurance. My guess is you got it sold to you years ago. That person that sold it to you probably hasn't contacted you in quite some time. You have not had it reviewed in a very long time. We call that a life insurance X-ray, a life insurance review. Come on in and have us review it to see the good, bad, right, wrong, or indifferent. Is it doing what it's supposed to do, or is it going to cannibalize itself? With Glenn and I see this happen and eat itself up and not have the benefits that you think are going to be there in the timing of when they're supposed to be there. So, or if you need life insurance, we're not here to say you need more life insurance. but does it fit into your overall plan for your immediate needs, your long-term needs, death benefit, if that's important? These are all the things that we're going to have a detailed discussion. If it sounds complicated, that might be ever more reason to pick up the phone and give us a call at 612-504-8400.
All right. Terrific. You can also go to havenfinancialgroup.com to learn more about the folks there at Haven Financial Group. They also have a number of educational seminars throughout the year. People are welcome to attend. You don't have to be a client. You can attend. They just ask that you check out those free seminars, and then you make sure that you sign up so they have a sense of how many people will be there. They do fill very quickly. All right. We're talking about insurance and how it relates to your retirement today. Glenn Ramey is with us. He is an insurance expert who works there at Haven Financial Group. And again, the number is 612-504-8400. When we come back, we want to understand annuities, another type of insurance, and we'll walk through annuities and how those could enhance, or maybe they're not for you. But we'll talk whether those are something that might be an option for you when it comes to retirement. You're listening to the Haven Financial Group Radio Show.